Hi, my name is Muhammad Kalam Fawzi. My metric number is 10DAT20F2040. Top Glove Corporation Berhad, headquartered in Malaysia, was founded in 1991 and is the world's largest manufacturer of gloves. What began as a small local business with one factory and one glove production line has grown to account for 26% of global market for rubber gloves. Manufacturing facilities are located in Malaysia, Thailand, China, and Vietnam. It has marketing office in this country as well as the United States, Germany, and Brazil, and export to over 2,000 customers in 195 countries. Top Glove Corporation Berhad mission: we are comprehensive solution provider of leading edge product through innovative technology. Second, ensuring safe human protection globally. Top Glove Corporation Berhad vision: to be a world-class glove manufacturer providing top product with excellent services through continuous improvement and innovation. Second, to be a world-class partner in glove and healthcare product.
Assalamualaikum madam, my name is Muhammad Harith bin Muhammad Zahmi and my metric number is 10DAT20F2060. Now I will continue the calculation of the ratio. Firstly, let's look at the liquidity ratio. Based on financial statement, Top Glove Corporation Berhad, current ratio for the year 2020, our group got 2.01 times, while for the year 2021, our group got 1.98 times. Next, quick ratio for the year 2020, our group got 1.76 times, while for the year 2021, our group got 1.46 times. Beside that, let's discuss the efficiency ratio. Based on financial statement, Top Glove Corporation Berhad, account receivable turnover ratio for the year 2020, our group got 9.39 times, while for the year 2021, our group got 30.23 times. Next, account receivable turnover for the year 2020, our group got 38.89 days, while for the year 2021, our group got 12.08 days. Inventory turnover ratio for the year 2020, our group got 8.37 times, while for the year 2021, our group got 4.59 times. Next, inventory turnover days. For the year 2020, our group got 44.60 days, while for the year 2021, our group got 79.44 days. Total asset turnover for the year 2020, our group got 0.83 times, while for the year 2021, our group got 1.67 times. Next, fixed asset turnover for the year 2020, our group got 1.64 times, while for the year 2020, our group got 3.01 times. Moreover, let's analyze the profitable ratio. Based on financial statement, Top Glove Corporation Berhad, gross profit margin for the year 2020, our group got 39.38%, while for the year 2021, our group got 67.86%. Next, operational profit margin for the year 2020, our group got 30.40%, while for the year 2021, our group got 61.35%. Net profit margin for the year 2020, our group got 24.72%, while for the year 2021, our group got 47.82%. Next, return on asset for the year 2020, our group got 20.55%, while for the year 2021, our group got 79.98%. Continually, return on equity for the year 2020, our group got 28.89%, while for the year 2021, our group got 108.36%. In addition, let's talk about capital structure ratio. Based on financial statement, Top Glove Corporation Berhad, total debt ratio for the year 2020, our group got 28.89%, while for the year 2021, our group got 26.90%. Next, time interest earned for the year 2020, our group got 63.95 times, while for the year 2021, our group got 2,397.42 times. Lastly, let's see the market value ratio. Based on financial statement, Top Glove Corporation Berhad, earning per share for the year 2020, our group got RM 0.66 per share, while for the year 2021, our group got RM 0.95 per share. Next, price earning ratio for the year 2020, our group got 90.27 times, while for the year 2021, our group got 4.21 times. Market to book ratio for the year 2020, our group got 8.04 times, while for the year 2021, our group got 10.26 times.
Greeting to Madam. My name is Sharmini Jaykumar and my metric number is 10D8020F1600. Today, I would like to comment each ratio for the 2020 and 2021. Firstly, there are two types of liquidity ratio. The current ratio for the year 2020 higher than year 2021, which is 2.01 times and 1.98 times. The higher current ratio for the year 2020 represents that the company is in a good position and they are also able to pay short-term debt, which is the company settle their debt within a year, while for the year 2021, the position of the company not stable and face problems to settle the short-term debt. So the company in good condition compared to the year 2021. The quick ratio for the year 2020 higher than the year 2021, which is 1.76 times and 1.46 times. The higher the quick ratio for the year 2020 shows that the company have enough of liquidity asset which can be used to settle debt or to pay for the company liability than the year 2021. The number of quick ratios for the year 2020 is greater than 0.3, which represents that the company is healthy. Secondly, there are 5 types of efficiency ratio. The account receivable turnover ratio for the year 2021 higher than year 2020, which is 30.23 times and 9.39 times. The higher account receivable turnover ratio for the year 2021 illustrates that the company is active at collecting the short-term debt from the customer or account receivable in a short period. The account receivable turnover days for the year 2021 shorter than the year 2020, which is 12.08 and 12.08 days and 38.89 days. The shorter days of account receivable turnover days represents the company able to collect the debts from the account receivable in a shorter period than the year 2020. The inventory turnover ratio for the year 2020 is higher than year 2021, which is 8.27 times, and for the year 2021 is 4.59 times. This shows that the company does not store the inventory for long period in the year 2020. The company also sold out the inventory in a shorter period and replace it very frequently. The company able to manage in out of the inventory very efficiently in the year 2020. Inventory turnover days for the year 2020 is shorter than for the year 2021, which is 44.16 days and 79.44 days. The shorter period in the year 2020 shows that the company does not hold or store the inventory for longer period. They are able to be sold out the inventory in a short period, and the company also excellent in management of the inventory in the year 2020. The total asset turnover for the year 2020 is higher than for the year 2020, which is 1.67 times and 0.83 times. The higher value in the year 2021 shows that the company more efficient at generating sales from the company's asset. So the company in the year 2021 is more efficient than the year 2020. In addition, there are 5 types of profitability ratio. The gross profit margin for the year 2021 is higher than for the year 2020, which is 67.86% and 39.38%. The higher percentage of gross profit margin for the year 2021 shows that the company has more money after the company paid off all direct costs related to run the company, and it illustrates that the company is more efficient in operating the company. The operational profit margin for the year 2021 is higher than for the year 2020, which is 61.35% and 30.40%. The company for the year 2021 is more efficient in operating the company and receive good return from the sales of goods into profit, while for the year 2020, the company faced loss due to inefficiency in operating the company. The net profit margin for the year 2021 is higher than for the year 2020, which is 61.35% and 30.40%. The higher net profit margin for the year 2021 represents that the company received more profit or good return from each ringgit of sale after all the expenses were paid off than the previous year, that is 2020. The return on assets for the year 2021 is higher, which is 79.98%. Then for the year 2020 is 20.55%. The company generate more profit from their economic resources or assets of the company for the year 2021. Furthermore, the higher return on asset also tells that the company is in good condition. The return on equity for the year 2021 is higher than for the year 2020, which is 108.36% and 28.89%. The higher return on equity illustrates that the company can return more profit to the investor for each ringgit of investment in year 2021, while due to lower return on equity, the company cannot return profit to the investor, so they will move to other company. However, there are two types of capital structure ratios. The total debt ratio for the year 2021 is lower than for the year 2020, which is 26.19% and 28.89%. The lower debt ratio for the year 2021 shows that the company settled all the debts. The company now has any debt, so less in financial risk for the firm, while for the year 2020, the company unable to settle the debt, so they have to settle the company's asset to cover the debt. The times interest earned for the year 2021 is too high than for the year 2020, which is 2397.42 times and 63.95 times. The higher times interest earned shows that the company can settle the interest of debt by using company's profit, and risk of the company also low for the year 2021. Last but not least, there are three types of market value ratios. The earnings per share for the year 2021 is higher, which is RM0.95 per share than for the year 2020, which is RM0.66 per share. The higher earning per share for the year 2021 shows that the profit gained from each share is really more satisfied than for the year 2020. The price earnings ratio for the year 2021 is lower than for the year 2020, which is 4.21 times and 13.27 times. The higher price earnings ratio shows that the investor willing to pay high price share because they assume that they can earn more in future for the year 2020, while for the year 2021, the investor not confident to pay. The market to book ratio for the year 2021 is higher than for the year 2020, which is 10.26 times and 8.04 times. The higher market to book ratio for the year 2021 represents that the price of the stock is high, while the price of the stock for the year 2020 is cheap. That's all from me. Thank you.